Hi everyone, and welcome to episode 7 of Coffee with Cheese. I'm your host, Narciso Bomben. For today's episode, I wanted to focus on a very important topic, and that's building resiliency into your financial plan. I'm going to look at two key areas as it relates to doing this. The first is going to be more from a high level around your net worth. How do we protect your net worth and make it resilient? And then I'm going to drill down a little bit and spend some time on your investment portfolios. Now first, as it relates to your net worth, very important, because if you think about your net worth as a measure of your financial well-being and as something that allows you to achieve the important goals you want long-term, so whether that be something like retirement, kids' education, maybe you're going to buy some real estate, you want to make sure that this not only continues to grow, but it's protected in the event that something happens. And what do I mean by this? Typically in your accumulation years, it's an impact to the income of one, or potentially, God forbid, both income sources within a household. Now, if this happens and you're not prepared, the one place you're going to go to continue to fund your living expenses is your net worth. So, a perfect example would be starting in 2020, leading now into 2021, is this global pandemic. If it's impacted you in a way where your income has suffered, you need to be prepared. It could also come in the form of a death, a disability, or a critical illness to a family member. So being prepared is of key importance. One of the simplest things to do is around an emergency fund. So an emergency fund can come in a couple of different forms. The first is having savings available, liquid savings, so not invested, something in the high interest savings account as an example, for 3 to 6 months worth of living expenses. Now this is a very personal decision. Every situation is different, so you need to give that some consideration. But by having that money tucked away, if something does happen, like a loss of a job, then that is a tool that you can use to protect your net worth. Now, in addition to the savings, if that's not possible for whatever reason, having access to ideally a secured line of credit for 3 to 6 months worth of living expenses is also another solution you can look at to be protected against any loss of income. Now, the other key thing that is more of a strategic and a long-term important solution is the topic of insurance. Now, the interesting thing about insurance is that it tends to sell itself, meaning it's pretty black and white. Once a proper needs analysis is done around your situation, the individual, the couple can either decide that, yeah, it's something they want to do, meaning they're going to transfer the risk to an insurance company, or if they're not willing to do it, they're going to absorb the potential risk themselves. So let me explain. If there is a disability in the household and there's a loss of income, and it would be something that would be typically covered by a disability policy, well, if you were paying premiums and that was to come into play, well, then you would be given a monthly benefit for being off of work, and you wouldn't need to tap into your net worth typically. If you didn't have that policy in place, you're either looking at something like reducing expenses, which can be challenging to do, or having to go into your net worth, meaning your savings, and these would be long-term savings if you don't have an emergency fund. So insurance, emergency funds, a couple of key strategies to make sure you're building resiliency in protecting your net worth. Now, let's spend a little bit of time talking about your investment portfolios. So right off the bat, I want to remind you that when you're investing for the mid to long term and you're in the markets to some degree, being aligned to a particular goal is a key first step. So whether that goal, again, is retirement, kids' education, you're going to put a down payment on some real estate, you want to make sure you understand your time frame, your tolerance for risk, as well as that investment objective, because ultimately, that's going to lead you to make a decision with your advisor around how much stock versus bonds am I investing in. So right off the bat, that gives you some resiliency from a personal level because you know you're invested the right way. Followed by that is probably the most important thing when it comes to resiliency in your investment portfolio, and that is the topic of diversification. Making sure not all of your investments are in one basket, so to speak, right? So you want to make sure that there's good diversification across not only geographies, but also various industries across the globe. So that way, if something happens, again, you don't have all your eggs in one basket. There is a rule, it's called the 5% rule, that at any one given time, you don't want to be so concentrated where you have any more than 5% of your investable net worth in one particular individual investment, right? So that again prevents you that if that company has some serious issues or God forbid goes bankrupt, you're not going to blow up your entire investment portfolio. So diversification, an important key. And then ultimately throughout the course of the year and whatever the strategy is with your advisor, rebalancing that portfolio, that as you have, what we call investment drift, having stocks maybe go up a little higher and then your balanced portfolio turns into a growth portfolio and you don't want it, you want to make sure that you rebalance back to your original investor profile to make sure you stay on track for what makes sense to your situation. Okay, so in short, be goal driven, understand your stocks versus bonds. Diversification is the key to resiliency in your investment portfolio, and then rebalance as it makes sense for your situation. Before I close out, I just wanted to plug another reminder for my upcoming Master Your Retirement webinar on Tuesday, January 26th at 12 p.m. Eastern Time. If you're 5 to 10 years away from retirement or quite frankly can't stop thinking about it, then it's a session that you should consider attending. Let me know, I'll get you an invite in case you haven't seen one posted anywhere. In closing, thanks again for watching. As always, if you have any questions, comments, please feel free to post them, share them with me. I look forward to introducing some topics into future sessions that you want to hear about. And as always, if you want a one-on-one virtual coffee with me, it'd be my pleasure. Please reach out. Thanks for watching. Have a great day and a great rest of the week. Bye for now.